Hey guys, what's going on? It's your boy LupoFX back with another video, or in that case, my first ever video on this channel, in which I'm going to be talking about everything related to trading. And in this video, I'm going to be talking about key levels, how I personally approach them, and how I draw them, essentially, how I take key levels into consideration for my trading. I just want to give you a tip here. Maybe this is something that you already use for yourself. Maybe this is something that you know from somewhere else. I don't know, ICT, smart money concepts. I don't know. That's not even, important to me right now. I just want to give you like something that you could potentially put into your own trading. Maybe that's something for you. Maybe it's not. Just a thing to consider. And before I jump onto the charts with you guys, I want to be talking about key levels a little bit, because this here is no ICT, no nothing. This is just literally me, how I found out for myself how I want to be using key levels to get crazy risk to reward ratios, or basically just more safer entries, or like trades in which I feel more confident about. And before we get into that, let me just talk about why key levels are important, right? And what they tell us, how we can spot them. So key levels are important in trading because how it is already in the name, right? Key levels. It's a key level within price in which we can expect something to happen. For example, reversals or continuation. In my example, or examples that I'm going to show to you guys, we are kind of like talking about key levels whenever we want to like trade the reversal, for example. Not all the time. We can also use it for confluence to go with the trend, because as we know, trend is your friend most of the time. But yeah, in general, I gotta say this video is a little bit, it could be controversial a little bit, because I am personally a fan of trading ranges, and I know it's not such a prominent thing to do. In my opinion, it's still a valid thing to do, because people always say price can only do one or two things, either go up or go down. But to be more realistic, price can go up, down, or it can get sideways. Now, don't get me wrong, I'm not gonna go ahead and trade like a range within the 1 minute time frame, or even the 5 minutes. Personally, for me, that doesn't make too much sense. But if you get yourself, in a range in the higher time frames, like 1 hour, 4 hour, or maybe the daily, not even the daily, like the 1 hour or like the 4 hour, for example. In my opinion, if you have like a specific amount of pips in between, the both like support and resistance line, key levels, whatever you want to, call them, to me that is still valid. So yeah, literally I would just go ahead and draw on some key levels within this range that I would want to see the reversal to the other side again, just to maybe buy on the other side. So let's just say we have a key level up here, and I'm just selling up here, and I'm falling down. I'm literally just aiming for the other key level, and as soon as we hit it, I'm just gonna go ahead and actually buy. But enough of that talking. Now we are going to go into the charts, and I'm going to show you some examples. Now, one thing, guys, I know that right now I'm going to cherry pick something like in hindsight, but this video is just for demonstration purposes, so you can actually learn. Go ahead and backtest this for yourself. As we know, trading is risky. Most people lose money. I cannot advise you anything. This is no financial advice in general. But I just want to show you how I draw them. Maybe that's good for you, maybe it's not. I just want you to understand the concept of how I'm doing it, and then you can, decide for yourself if you want to use it or not. So without any further ado, let's just jump right into it and have a look at these key levels. 1 second, guys, I don't really want to interrupt you, but just on a short note, if you enjoy the free content that I'm providing to you guys, make sure to like the video and subscribe to my YouTube channel, because more free content is on the way, and this way you can help me out and show some appreciation. Also, make sure to follow me on Instagram. Anywhere on the screen you can see my Instagram right now, and this is my only account. And one important thing is, I will never go out and reach out to you and try to sell anything to you. So if anybody uses my name and tries to sell something to you and pretends to be me, it is not me. I will never reach out to you, just so that is clear. And now let's get back into the video. Alright guys, so the glasses are on, we are ready to hop onto the charts, and what we can see right now is on the top left, we can see we are at GBP USD right now, and as I said before, this is hindsight, right? We're just going to look for some examples here. Right now we are on the 4 hour time frame. If you don't believe, here we have it. Okay, so it's in German, don't get confused, but 4 hours essentially. That's what we are on right now. So now that we know that we are on the 4 hour, because that's where I want to look for essential key levels, because the higher the time frame, the more powerful the key level, from my experience at least. So something like this, for example, if I see this, let's just assume that this is current price range, right? What I would be doing right now is just look for pivotable points in which price, for example, rejected all the time. One thing that stands out really fast is this wick, for example. So this wick could be considered a key level. So I would just put my rectangular shape in here, and what I would do is from this body, this green candle, I would start from the body and draw it all the way up to the upper wick, and this would then be my key level. I would put it here and draw it all the way up, and this would be my key level. Now what I would want to see right now is basically just price coming back into this zone so that I can sell again from it. You could basically just press this button here and put an alarm to you, so you won't even have to go ahead and be on the charts 24/7. Maybe it would take 1 or 2 days or even longer or shorter before your trade actually, your alarm gets set. But that's actually quite good for us, because then we don't have to be on the charts 24/7. You can just link TradingView to your phone, for example, set up an alarm, and the market tells you when it's time to actually go on the charts. So therefore we won't have any FOMO, fear of missing out or what. There's no bad trades we can get ourselves into. But anyway, so we cannot see this wick anymore, because as we speak right now, we drew this on spot on. And what we can see right here is that here, for example, we already had a touch. Now, since we are on the, on the 4-hour chart, we could now drop down to a lower time frame and actually look for confluence to go down. But what I like to do, and that's why we have like a dotted line here in the middle, is I like to wait for price to give me a better entry. And you could also put your Fibonacci tool on here, basically just, putting it from here to here and whatnot, and then the 50% of it, but you don't need that. I think the naked eye can already see that out of this box, this is the middle line, and I just love whenever price gives me the opportunity to sell from the middle of this key level, because then we have, a better risk to reward or whatnot. Now, what we can do is either we could just go ahead, it depends on your trading style. Now, once again, no financial advice, go ahead and backtest the best way for you, for yourself. But what you could do now is you could basically just, as you approach this level, if your alarm gets set or like triggered, you could go to the chart right now and basically just sell from here and put your stop loss, for example, at recent price action, like either like high levels up here, but that's 74 pips. I wouldn't even do this, or basically just put it onto the upper zone of the key level. Now you would almost have a 20 pip stop loss, and you could basically aim for a lower part. Now, what is a pivotable point down here? You would basically just go ahead and look for, for points in the price or whatever, or zones in the price range in which it rejected most of the time and went back up. We can see that this is clustered, for example, right? We could take this little wick here, right? We could draw it like this, and then we would have our level, and then we could buy again. Now, but this is a little bit too close. What is way more pivotable, for example, is this wick here. This wick and this wick already touched it again. So we could basically just draw it from here to there. Now, here we have a little problem, in my opinion. This here is a problem to me because this zone is a little bit too big, and I don't like it when it's like too big like this, because even like you have to think we are already on the 4-hour time frame and this zone is already so big. So we could try to make it a little bit more detailed, and what we could do in a situation like this is, get rid of this key level right now, and we could look at this wick, for example. And what we could do right now is look at this wick and mark it up from here to here, basically. Just a price range in which things get rejected. And now we can see it is still a big zone, but we can still see that this price dipped into this perfectly. And here you can already see why it's important to sometimes leave a little bit rest room, or like a little bit room for your stop loss, because then we shot up again. But basically we can see that we still got no entry here, right? If we bought, for example, here, I know it's hindsight, but this is just so that you can get the concept. Go ahead and back test it for yourself. You can go to the 50% level here and just put your stop loss somewhere here. Maybe go for the 20 pips, maybe more. And I mean, even here, that would be a 1 to 4, or you could aim for the, for the zone again. It would be a 1 to 7, depending on how much you risk. This could already be a good trade, right? I mean, 1 to 7 is good, nevertheless, but you get what I'm saying. So, and this is something that you could just repeat. Now, you can, if you are up here, you could basically just sell this whole range down here again. You would have a 1 to 8 and whatnot. Now you can see here we never got any like We never got a re-entry on that. Now, that's why it's also important to know a little bit about, for example, market structure, because here we now know that this zone, it is very strong. We can still leave it on the chart because as we can see, price got rejected crazy. But here, for example, in hindsight, we now know that, for example, here we rejected this price. What we could do right now is, after we fell here, for example, came up here, but had this crazy rejection week, this could have been our newer zone, right? We could mark it up from here or to here from here, just draw it up like this. And we can see that here we dipped down and already almost had our touch. Depending on if we are on the charts or not, we could, go ahead and look for like confirmation and whatnot. But that's not even important. Let's just look for another example. All right, guys. So still on GBP USD on the 4-hour time frame right now. Here is something that is pretty interesting to me, because here we can see something like this. We have a wick that is not too big, not too short, and we could mark this up. Now, why would I mark this up? I would mark this up because after we reached this key level in particular, we had this massive, bearish engulfing candle going to the downside, and now we know that this is a price that, people are just not happy with, and they are selling from here. On the other hand, for example, we can see that people are down here. We could mark this also up and take it into consideration to buy again, or like for take profit levels and whatnot. By the way, if you know a little bit more about, for example, supply and demand, market structure, key levels, order blocks, whatever the case may be, you could also see that to the left you would also have a zone here or another zone here. So it gives us extra confluence that, stuff could possibly be happening here. And all we would do right now is basically just put an alarm like up into here or whatever, however we want to put it, and we would just wait for price to give us an opportunity to, sell it back. And if we go and look, we can see that price even broke this level here. That's why it's important to, not just go straight into the trade, because if you, for example, just waited here onto this zone and you wanted to buy and you just put a buy limit, you would have been stopped out like crazy. That's why it's important to leave an alarm and look for confluence, right? So in that case, we would still just wait, and here we can see a big push. So when we see this big push, we can already adjust this zone a little bit, because this doesn't, seem to be too crazy, right? I mean, to be fair, it doesn't have too many touches. The more touches the zone have, or the more rejections, the better. But in that case, this rejection wick is crazy. So I would mark it up like this. Starting from this zone down from here, this would now be the new zone in which I would like to buy, because this here shows us a complete reversal. Now let's just see what price does here. That's pretty interesting. I forgot to mention as well. That's why I didn't delete this level here. This level used to be something that we wanted to buy from. Now we broke this level and then we shot up again. Here we can see something pretty interesting, because this is the classic break and retest strategy, right? On the 4-hour in that case. So it's pretty interesting to me that we broke this level to the downside, then we shot up again, and the candle came back to retest this level and gave us another opportunity to buy. Now, for example, if we were actually like in live market conditions and we were here, but we can see that the candle is moving up, depending on how aggressive your trading style is, you could have went in for the trade as soon as you left, for example, the zone, put your stop loss below the candle or whatever, and you would still get yourself like a crazy risk reward, right? And then you can see essentially you would hit your take profit. So now the interesting point, I already like kind of missed it, but let's just say we are still in the 4-hour time frame. If this is our zone right here and we have our entry here, or like our alarm, we could have gotten into this trade, because what you could have done here is, now that let's just assume that here in this price range your alarm got triggered, right? You could have went down, for example, to the 15-minute time frame and looked for like a reversal pattern, and here you can see it. Like we pushed up like crazy, had a wick rejected, and then another candle formed, like a doji got formed, and you could have gone into the trade as soon as this candle broke either this level of the opening or like the lower part, depending on how aggressive you want to go about it. And here you could see, for example, if you took the more chill approach, put your stop loss either above the zone, above the candle, or even above the most recent candle. 8 pip stop loss, it's crazy. You gotta see it for yourself. I personally would put it like this, right over the candle. And then what you could aim for, like take profit wise, either you could go for one of these levels to hold it again, or you could go and look to the left where structure is. For example, here, this would be a potential take profit level, because price used to bounce around here. Price also used to bounce around here, so another level here. Another take profit level would be here, in my opinion. another one would be here, and this is just baby steps, you know, or another one would be more pivotal here, and so on and so forth. You can decide however you want to go. You can go for a fixed risk to reward of, for example, 1-to-1 or a 1-to-2, depending on how you want to do it. You could trade a 1-to-1 off of that, and as soon as you hit your 1-to-1, you just put your stop loss on break even and just set your, you know, runners run. In that case, let's just see. Our 1-to-1 would be here, so you can see that basically, boom, here you would already hit your take profit. So now being back on the 4-hour chart, we can already see that if we had our alarm, for example, here, and we took the more aggressive approach, even if we just put our sell here and the stop loss, you know, above the zone and whatnot, even look to the left, okay, this is a little bit dangerous, but still, we could see that overnight, you know, or like over the weekend, you know, this trade would have played out perfectly. And here we can just, you know, have a look on how far it dropped. It just continued to drop from here. It came down for a little retest, and then you can see eventually, you know, we would have been out. But already here, for example, look at this. That is just crazy, bro. Yeah, so I 1-to-7.8, not too bad, right? Because I assume at this point your stop loss would already be on break even. At least that's what I would be hoping for. We can see the pivotal points got hit, so a pretty nice trade from our side, and now we are at this level again. However, I'm going to show it to you right now why it's important to not just jump into the trade like crazy, because here we can see like we have a rejection here, but the candle goes up again. Now we are breaking above this level, and we can see that the price is actually starting to trade a little bit above the zone now. That's why it's also important to be able to learn to trade with the trend. I'm going to show that in another video, but what we can also already see here is this used to be a level, right? We broke with this candle, you know, to the upside. This green candle, it shot up, and then this candle came back to the 50% level to retest it again, giving us the opportunity to go in for a trade. Once again, let's just say, you know, you waited for this. We are in an uptrend, so you could do this. Stop loss either here, for example, 1-to-2 already hit, you know, or like more aggressive with these candles, for example, you know. However you want to do it, bro. Here you would get yourself some crazy trades, not gonna lie. Or what you could also do is, you know, wait for the retracement on, for example, the 50-minute time frame again, go down, look for like a pattern for continuation. There you would have it again. This big candle coming down, you know, just making people afraid like crazy. A doji after a doji, and now after this doji, let's just say we printed above, you could have gone in maybe as late as here, for example. Then your entry would have been here, stop loss, for example, under this doji, right? And then you could have targeted these highs, 1.18, whatever, and you would get yourself a crazy trade again. And you could see that we had some more opportunities to trade from the zone again and again. All right, so one more example in this case, even though, you know, we took some profits with the buying, here's like a crazy wick again that would, you know, spike my interest in actually marking it up. Let's just see how the trade goes along. Okay, so now finally we do break this level again. What we could wait right now is basically just wait for a break to the downside, a retest either here or onto the 50% level, and then like a continuation to the downside. Let's just see what happens. So you can see we basically just, you know, shoot right back under. So we see that this level is actually a pretty important level, because whenever we are above this level, we use this as a bounce back tool to get even higher. Whenever we are below this level, we are using it to, you know, drop even further below. So here we can see that this trade would have been perfect. Even in this matter, once again, here, let's just look at this, for example, again on the 15-minute time frame. Here on the 15-minute time frame, you could have seen we would have went down, so the wick would have been here, the peak low was here, but the price actually opened here. It tried to push up, but you know, that's why it's important to be able to read candles. It tried to push up, but eventually it got pushed down again, and we printed this candle here. And actually when the next candle broke down below once again, could have, you know, gotten our entries here, for example, the stop loss over this candle, 13 pip stop loss, and then we could just, you know, let it run. And as we know from this example already, this would have been a crazy fucking trade, even though if we held it all along. It would have taken some time to play out, right? But it's important to be patient. We know this already now. So yeah, a pretty nice trade, you know, right from the playbooks. Even here on the 50-minute time frame, we could do the same strategy again, you know, having our key levels, for example, here, let's get rid of this, right? If you were too late for the move, you know, just mark up these key levels here, key levels from my opinion, right? Wait for the retest. We can see, I think some people call this the cup and handle or what, I don't know, but nevertheless, here you would have it again. You would have your peak. It got broken again. As soon as we break below, just entry here, we are still bearish. Stop loss then goes here. Could have, you know, gotten ourselves into the trade again and hold it. So right guys, that's basically just how I approach these markets with key levels. Now once again, I know that this video was, first of all, in hindsight, right? But that was just for you guys to get the concept, basically. Just go to the 4 hour, for example, or the 1 hour, however you want to trade. Look for like wicks that stand out, mark them up, put an alarm, and wait until they get hit again. You can do this with every currency pair, and I bet you would get into a trade at least once every 2 days, if not every day, but you don't even have to, right? So I know it was a little bit wishy-washy. This is my first video anyways. I still hope that this video was helpful for you. If that was the case, you know, let me know in the comments below. Make sure to like the video, and if you want to have more free content like this, then make sure to subscribe to the channel. It would help me out, and you would get some free knowledge. So I guess that's a win-win situation for everybody. There's more videos on the horizon. We're going to be talking about, you know, a little bit more about break and retest, because I can see myself, you know, going into more in-depth and then another examples and whatnot. We're going to be talking about trading times, what is a lot, how to put up trades in general. We are going to be talking everything related to trading. If you're new to trading, this is your time to subscribe to the channel, as I said, because that's going to be free content all over the place for you guys. If you still need, for example, a broker to trade on, or like a platform, I personally use Vantage. You can do so for yourself at your own risk. The first link in the description is a link where you could sign up for Vantage. However, you cannot do this if you're a US citizen. I'm sorry, it's their regulations. That's just the broker that I use. If you want to, you know, use the link in the description, you can do so. If not, perfectly fine. Also, what you can do is follow me on Instagram, because there I can actually answer a few of your questions. Everything is going to be linked into the description. Nevertheless, this outro is way too long. All I want for you guys is to get some free knowledge, and go ahead to the charts right now and back test this, and, you know, check this out. If there's questions, leave them in the comments below. I'm trying my best to answer to them and also do videos about this. And other than that, once again, first video on this channel, the quality is going to increase, and I hope you enjoyed this video, found some value in that. And yeah, good luck on the charts. You guys get this. Don't even worry about it. Go ahead and break. I want to say go ahead and break and retest it. No, what? Go ahead and back test this, and you're going to be fine. So that's going to be it for the video. Thank you.